Welcome back to the machine of all trades, master of none. I am the ghost in the machine, and the financial markets is where I operate. Okay, guys, I'm going to teach you guys on, or I'm going to present to you guys, about the three-box strategy or the three-box system. Well, this is the first entry model that I'm going to teach, and there are a lot of entry models that I'm going to teach in the future. So, okay, let's continue. Let's start. Okay, in the three box system or in the three box strategy, we are going to have to identify three boxes. We are going to have to identify three price action, whatever, that we're going to have to displace our boxes at. One. So the first box that we're going to have to identify is the displacement box. Box. Oh my god. Box. Yeah, displacement box. And the second box we want to identify is the POI or PDRA. And the last box we want to identify for our entry model before we get into our entries is the entry confirmation. That's where we're going to do our confirmation before we get into our entry, which we're going to do that in the lower time frames, right? Which I'll show in examples in the future video. Okay. Okay. Here's an example of a market structure which turned bullish. Okay, we saw that the market structure was bearish prior, and then the moment when it hit some demand zone or some PDRA, or maybe it swept some low, it went to break bullish. It went to break the structure, this structural higher low. Is it a higher low? No, lower high. It broke it to the bullish side. After that break to the bullish side, we're going to firstly identify our first box. This displacement from this low to that high is our this leg from this low to that high, this displacement, that will be our first box, which is the dealing range. And I told you guys about the dealing range in the previous videos. If you haven't yet watched that video, go back and watch. Okay, yeah. So after identifying our dealing range, this will be our dealing range high, and this will be our dealing range low. The dealing range high, or the starting, or the moment we identify the full point of our dealing range is when we see the market starting to retrace backward, and that retracement we anticipate it to come to our discount price levels, so that the smart money algo can buy the market bullish. It will come back retracing to mitigate some PDRAs to go bullish. Okay, so we identified our displacement leg. After identifying our displacement leg, within our displacement leg which broke structure, we're going to identify our point of interest. That's our second box of interest. Our point of interest, or PDRA. That's where we are going to identify our our entry PD array or entry point. Yeah. After identifying that entry point is the one that you're going to realize, oh, it was part of this displacement leg that broke that structure. All right. Or itself was the cause of that structure, that break of structure, right? And after identifying that, the moment when price reaches our point of interest or PDRA, we are going to do our entry confirmations. We're going to try and do our work off, or we're going to try and doing our similar three box break of structure, or maybe just a simple break of structure and hitting our lower time frame PDRA or point of interest in this example, or in this example that I'm going to do in the future video. It will be more onto supply and demand. What you're going to realize what you're going to realize is that our confirmations can happen at our PDRA, or maybe below our PDRA level. Why? And what you're going to realize when our confirmation happened after it have what a wicked below our PDRA, or maybe in this example our demand zone, you can find that it had wicked and closed its body within this POI or demand zone, and that's when you're going to realize, oh, that this was just a sweep and not a, not an invalidation of this point or demand zone, but just a sweep, so that we can go to the upside. So that's what you're going to realize. Yeah, confirmations can happen at the PDRA, or maybe after sweeping a little of the PDRA but closing the body within that PDRA. So this was a bearish example, and this was also a bearish example, but here we didn't break structure until we didn't break a structure. We didn't make a lower low, but we make a higher low, and then we broke structure. Then to show any interest for the market to go up. So between this one and this one shows strength, and this one shows yeah, it's broke structure, and it shows that it wants to go up, but it's a little bit weak. But this one is strong, and it shows the interest of the market of really wanting to go bullish. Okay, and this our daily range high, because we broke structure to the upside, this is going to be our weak high. Why do I call it a weak high, and why do I call this low a protected low? I call this a weak high because it's our target. It's weak. It's not protected. This PDRAs that are below it doesn't protect it, because these PDRAs by themselves are targets. But this one is protected. It's a protected low. Why? Because the PDRAs within here they are meant to support price so that it can go to the upper side. That's what we're anticipating. So we're anticipating this low to be protected and not targeted. So the moment when it targets, it breaks below, we know that that was a break of structure. Hence, we are expecting the market go to mitigate above the premium levels to continue bearish. That's what you know. And that break has to be a full break of that break. A candle has to close its body outside, not weak. That week will just be a sweep of liquidity to go up. Okay, we are going to look for this entry model in 5 to 6 time frames each. Oh, we are going to look for this entry model in 6 to 5 time frames, each time frame being an internal structure or internal 3 box of the bigger time frame that precedes it. I don't know if I used that word right, precedes, in the sentence, but anyway, what I meant, I'll explain. The time frames that we are going to use are the weekly, daily, H4, 15, 1 minute. And between the 1 minute, you can choose 1 minute, 5 minute, 3 minute, or the 2 minute, right? And weekly is the internal structure or 3 box for monthly. Daily is the internal structure or 3 box for weekly, and H4 is the whatever for the 3 box. I think for the daily, 15 is the whatever for the H box. What the fuck? Here's wrong. Oh yeah, it's right. So sorry. H4 is the whatever for the daily. 15 is the whatever for the H4. 1 minute, 2 minute, 3 minute, 5 minute is the whatever for the 50 minute. Okay. Here's an example where when we were breaking, the market was already bullish, but the market was already bullish, and we continued breaking bullish. So the current 3 box that we can see is this one. We broke structure to the upper side and retraced, did a retracement, hence labeling that as our dealing range high or weak high, and then getting back below to our PDRAs that are going to support price to go to the upper side, which in this example is going to be our demand zone. And like I told you, let's imply this as our daily. Implying this as our daily, these 3 boxes that we can see in the daily. So in the daily, you want to realize that within this line that I have labeled in the daily chart, there's going to be breaks of structures that are going up. We're going to have a bullish market break of structure, and then we're going to see it shifting, now going bearish, now shifting backwards, going up, shifting bullish, and then shifting bearish again. You see that thing. You're going to see that in that daily, right? So that internal breaks, that's an internal 3 box. So if we're in a daily, that break of structure internally, that would be an H4, this thing. It will be this thing in the H4, and within the H4 you're going to see miniature breaks or small breaks of structure that are happening within there. and that small whatever in the H4, that's the 15-minute, and etc and etc, right? I'll show you an example anyway. So yeah, here's an example of using a simple whatever that I was drawing, guys. Like, I am the GOAT. I am the best trainer in this country. I am the best mentor. I don't give a fuck whatever you are saying, wherever you are. But guys, look at my drawing, guys. Like, bro, I must be the algorithm. I must be the one who moves the markets. Like, look at this and fate. But anyway, let's move on. We can see that the market was bullish. Why was it bullish? Yeah, we can see that we are bullish, and we turn bearish, and we bullish, and then we turn bearish. So someone, when we're here, might think that, oh no, the market in the weekly is overall bearish, which is false, motherfucker. This market is bullish. Why? We saw that it's market structures that are bearish and bullish. They are eventually going to the upper side. You see, so that eventualness go to the upper side. We mark it like this. The moment we see this breaking of a structure, this was a bearish structure. The moment we see that break of that overall bearish structure, that will signify now we are making a new dealing range or trading range. So we broke it and we started retracing where when we broke structure, when we made a new bear structure now going bearish. That retracement, we see that as a retracement to what? To our to our discount levels, to go and mitigate a PDRA or point of interest to go up, and then do another retracement of a new dealing range that would have been created after we have broke there. Once we break up, the low here will be our low, dealing range low. The high that would have been made after the retracement will be our new dealing range high. Let's continue. Oh, wait first. Okay, yeah. This internal breaks, this internal thing, like here, this break internally is the daily. Is the daily break of structure, like I shown here. But let me. Okay, yeah. Here was a weekly market structure shift. Continuation, whatever. We did a retracement to somewhere, and we landed below at our discount levels, which is this will be our equilibrium level. And within this 3 box, we had mitigated our weekly internal there, but eventually we have mitigated whatever there. Yeah, and we went bullish and made an internal break of structure. So here there was going to be a confirmation for the weekly. The confirmation for the weekly is when we see a daily break, like here. Here the market structure turned bullish there in the daily. It broke structure to the bullish side there, but it did our confirmation of our weekly here once we had our break of our internal daily structure there. We mitigated there and we went bullish and rebroke bullish. Hence, we are anticipating it to come to retrace our discount levels to go and continue bullish. If you don't understand, tell me. I'll make another video to explain further, or I'll coach you. Now I'm a coach. I'm not a mentor. Like, I am the Pep Guardiola of this industry. I am going to introduce a coaching service, not a mentorship. Let's continue. Well, yeah, this is our weekly demand zone. It mitigated there. This is our daily whatever, dealing range low, dealing range high, week low, motherfucking entry. Like, bro, liquidity crap. We fucking did this shit. Let's continue. What